Hey guys, that was the closing bell for today, November 28th. We had a little bit more activity than yesterday for sure. I don't know if we are quite at full strength in terms of everyone back participating in the market, but let's take a look and find out. We definitely did get some movement in the market, even though we pretty much ended up trading sideways. So let me, if I could find my screen controls, I would share my screen. Here we go. Okay, let's take a look. Intraday, what happened in the S&P 500? We opened lower, we traded high, so not off of the economic reports, but a little bit after, so around 740, we really started to move upwards, and then we came all the way back down and consolidated, and then got a little bit of strength towards the close. Closing looks like up, let's see, up 0.09%, mostly sideways. We've lost that downward curvature, and so we're mostly consolidating sideways at this point. What is interesting is, once again, intraday, we really don't trade off of technicals. It really is mostly supply demand. So you can see how well these lines that we drew, how well the market responded to those lines. So we came down, hit this purple line, we traded in between these purple lines all the way until we made that surge up to another purple line, came very close to the previous high, not yesterday's high, but a couple of sessions ago over here. And then we came all the way back down to the previous low, yesterday's low, and then kept bouncing between the VWAP and the previous low until at the end we made that surge upwards and broke through the VWAP. So once again, when you're looking at day trading and the movement patterns intraday, the best indicators are not going to help you. The best technicals are not going to help you. It really is the supply demand, how excited and emotional people get at different prices, and that is what's going to determine price levels. Just these very simple lines on the chart can help you determine which way market's going to move at different price levels. So since we're going mostly sideways in the S&P 500, it's worth checking the other indices. QQQ mostly sideways, but it's stronger, up 0.27%. Dow Jones also up 0.22%. So that's interesting, very interesting that tech and the blue chip stocks are both up a similar amount, but S&P is down. So what we want to find out is what sectors dragged the S&P down or prevented the S&P to perform as well or as much as the Dow Jones and the NASDAQ? Because usually it's the Dow Jones and the NASDAQ competing against each other, that if the S&P 500 right in between the two of those as the average of those two. Today we have a completely different case. We've got the S&P 500 underperforming those two, and those two are performing a very similar amount. So we'll dig into that in a little bit. We'll look at IWM sideways as well, but down 0.4%. So definitely not the time to get into small cap stocks. I know at least one analyst who's been telling their followers that now is the time to get into IWM. Maybe if you take a very long-term perspective, but I definitely would not be getting into IWM right now. Let's take a look at TLT bonds. Bonds also trading sideways, but getting a little bit of strength, 0.2%. And let's look at our dollar. Dollar down 0.4%. So directional movement in the dollar breaking below the MA200. It's looking like we really are not going to bounce in the DXY, at least not off of that MA200 level. So if we do bounce, that MA200 level now becomes a resistance for the DXY. Now, we have to remember, though, that DXY is a trending asset. It's not really so the US dollars currencies, they're trending assets. They're not mean reversion assets. So they'll tend to move for very long periods of time, and they only act on mean reversion on a very long time scale. So we don't necessarily want to look at DXY the same way that we do as equities. So really, we're just looking at this as a downtrend, and we're not sure yet at this point in time if we are nearing a turn in that downtrend. The only real clue I have at this point in time is where are we in the Keltner channels, because it will still follow ATRs, because what are ATRs? ATRs are just normal price movements and multiples of normal price movements. That's similar to saying standard deviations. What is a normal movement and how far outside of normal movement am I? Am I one standard deviation away? Am I two standard deviations away? Am I three standard deviations away? So the more standard deviations away, the less normal the case is. And we will eventually, the law of mean reversion always applies. It's just how strongly does it operate in this market? So plus 3 ATR is still very good for the DXY. You can see that. Hits the plus 3 ATR, comes back to the plus 1 ATR, never quite hits the plus 3 ATR, comes back down, hits the plus 3 ATR, comes back down to the EMA20, hits the plus 3 ATR, comes down to the minus 1 ATR, hits the plus 3 ATR, comes down to the minus 1 ATR. So it still follows these normal Keltner channel rules that we use in the equities. And here we hit that plus 3 ATR, came back to the EMA20, and now we're at that minus 3 ATR. We're very close to touching it today. So we touched this minus 3 ATR, stayed here for 3 days, moved back to the EMA20 and beyond, actually to plus 2 ATR. So we do still expect it to honor these ATR channels, these Keltner channels, and we are at that minus 3 ATR. So it could be time soon for the DXY to start turning around. Just like for SPY and the other indices, they're too high. They're too high. Today, we're still at the plus 3 ATR. We started to kind of deviate away from it. At our high was still touching that plus 3 ATR, but our close is a little below the plus 3 ATR. So we are potentially starting to move away. So like this body of yesterday's candle was not touching the plus 3 ATR. Today's body is not touching the plus 3 ATR. We are starting to creep towards that plus 2 ATR, but we're really looking for that plus 1 ATR and beyond for our pullback. So our plan still hasn't changed. Our evaluation or analysis still hasn't changed. Let's take a look at the volume in the markets today. Same as yesterday. So I was saying that yesterday we wouldn't expect full participation, and then today we would maybe expect even more, and then probably full participation by Wednesday. Looks like we're not quite following that schedule. We have the same amount of volume happening today. So there is definitely slowing momentum inside of this market, and that even though we're getting these baby movements upwards, we're not getting volume. There's not a lot of money behind it. So it can fall very easily, or if there's a strong surge in a positive buying volume, then it could send it upwards as well. So we really are in this consolidation pattern right now. So despite everything that is showing me, and despite my personal belief that we're going to get that pullback, if I face the actual reality of what is happening, then we are consolidating and going sideways. So I need to distinguish my view from the actual fact of what is happening. And of course, I trade my view, but I never allow my trading activity to deviate too far from the reality, because I want to capture profit if my view is correct, but I don't want my portfolio to be damaged or hurt beyond repair if my view is incorrect. And so I still want to be cognizant of the actual reality of what was happening. So we have this sideways. That's why this morning when I showed you that QQQ put trade, I told you don't go crazy. Make sure it's in the context of your entire portfolio, and that we're making the right decisions in the context of your entire portfolio. Let's take a look at and see how that one did actually. So far today, we've got our pre-market hedge example, our pre-market QQQ example, and saying that it's down a baby amount 6.9% because the QQQ did go up a little bit today. It is up 0.26%. So, but really that's sideways movement. When we have options, we're leveraging everything. So 6.9% movement in an options trade is, in a pure call or put options trade, is a baby amount. It's nothing to get excited about. It's just sideways movement. So if we do get that movement below that blue line that we drew, then this trade can become very profitable. And all that happened today was I moved a little bit further away from that blue line instead of towards the blue line. So that trade is still good and valid. What would invalidate it? What would say, hey, it's time to give up on this trade? If we keep chopping sideways until we hit the +1 ATR blue line, then I would say, okay, well, all we did was go sideways instead of trade downwards. And what happened is I would have lost time value. So I might lose 10%, 15% on this trade if that happens. But if it goes up then and breaks out of this consolidation range, that I acknowledge that I'm wrong, I close the trade immediately, and then I take the loss, which might be at a 20, 30, or 40% at that point. And then if it breaks down and I'm proven correct, well, that was my break-even point all the way till expiration, I believe, is what we determined on that trade. And each movement be further below this blue line exponentially increases my profit. And if we make it all the way to that EMA 20, then I stand to make quite a bit more. So as long as my reward to risk ratios are in line, then the trade is still valid and still good to hang on to. So that's definitely the case. This sideways movement inside of the underlying doesn't change the dynamics of my trade. I think that's about it. We have some earnings coming up after the market today. So we'll want to see CrowdStrike will be influential. Hewlett Packard might be influential. Workday will be influential. A NetApp will have maybe influential. And then tomorrow morning, before the market opens, we've got Dollar Tree and we've got Hormel Foods. So a couple of staples and more defensive stocks. So more tech, more risky stocks today. Tomorrow morning, we'll get to see defensive. So we'll see if this same sector rotation is playing out in terms of earnings reports and reactions to earnings reports. So that is something that we'll remind ourselves to take a look at tomorrow morning. And then other than that, it was another really quiet day. So there's just not that much to talk about. Right now, basically, we're in this wait and see game. Wait and see. Do we keep going sideways? How long do we go sideways? Do we break down from going sideways? Do we break up from going sideways? Do we get that pullback? Do we break down and then get that pullback that we've been anticipating for the past couple of weeks? Or do we finally break out of this consolidation range and go up? Now, I personally, the chances of us breaking up before we come and touch that +1 ATR is low. It's very, very low. So +3 ATR, where did we come down to? Beyond the +1 ATR, almost to the EMA 20. How about here? Down to the EMA 20. How about here to the +1 ATR? Okay. How about here to the +1 ATR for a while, but then eventually down to the -1 ATR. And then over here, never quite hit, never hit here, down to the +1 ATR, or sorry, -1 ATR, down to the +1 ATR. So each time we pull back, it's at minimum to the +1 ATR. Here it was to EMA 20, then it gapped down to the -2 ATR. Right? Over here, pull back to the +1 ATR, pull back to the -1 ATR, pull back to the +1 ATR. We didn't quite hit the +3 ATR, but it was close enough, and we pulled back to the +1 ATR. Here to the -1 ATR, here to the -2 ATR, here to the -2 ATR. So here to the -1 ATR, then we recovered and then pulled back to the -1 ATR. So we really am expecting us to touch the +1 ATR before any resumption to the upside. So that's all we're waiting for right now. That's the most likely case scenario. I've showed you every single case for the past maybe 2 or 3 years, and not once has that rule been violated. So it's a very strong pattern within the markets, and that's what we're waiting for inside of our indices. We're not going to get too long or too short before that event happens. All right, that's all. We're just going to sit and wait and be as patient as we can as we're waiting for this market to finally get some volume back into it, and then we can get some directional movement. I really do believe that we do have to come and touch that +1 ATR before we can have some sort of Santa Claus rally into the end of the year. So wait and see. We'll just have to be patient. All right, that's it for today. I'll see you guys tomorrow morning for the pre-market. Hopefully we'll get some volume back into the market and some action where we can start seeing the results of some of the positions that we've placed ourselves into, or at the very least, we can finally be comfortable entering positions with a more significant amount of our portfolios when that pullback actually happens. So I'll see you tomorrow, guys. Have a wonderful day.